So the first company we're going to take a look at is Microsoft. Now, going into earnings, Microsoft made some pretty big headlines after it announced it was acquiring Activision for $68.7 billion. Microsoft will become the third largest gaming company in revenue behind Tencent and Sony. With this deal, Microsoft will gain control over some of the biggest game series in the world, including Call of Duty, Warcraft, Overwatch, and a bunch of older games. Now, keep in mind that Microsoft did purchase Bethesda Softworks just over a year ago and already purchased Minecraft back in 2014. Now, the Activision deal still has to go through regulatory approval first, and recently there has been a lot more harsh discussion about breaking up big tech, which Microsoft had been escaping, but we're gonna have to see how this plays out. I do expect a fair amount of scrutiny for this deal. It seems like the goal is to compete with Facebook towards the future of the metaverse, and owning more and more gaming platforms and developers probably seems like a smart way to gain an edge in the competition. Satya Nadella, Microsoft CEO, says that he doesn't expect a centralized metaverse. Instead, he thinks there's gonna end up being multiple metaverses, but if you ask me, to be honest, I'm not really that sold on the idea of the metaverse anyway. I do feel like we've seen a lot of physically interactive content come and go from the old Wii, which brought out the Xbox Kinect and the PlayStation Move, and then things like Google Glass. But time and time again, people vote with their money, and it just doesn't seem like consumers really want that fully immersive experience that they're trying to sell you with the metaverse. Maybe something's gonna come along and change my mind, but for now, I'm just not really that sold on the idea of the metaverse succeeding 5 to 10 years from now. Now, Microsoft's earnings came out on January 26th, and the earnings came in at $2.48 versus $2.31 expected, and revenue came in at $51.7 billion versus $50.8 expected. Now, I put together this pretty cool chart showing a full year of earnings for each quarter reported. So quarter 1 22 is actually showing you quarter 1 21 through quarter 1 22. And quarter 2 22 is showing you quarter 2 21 through quarter 2 22. So it's a full year of earnings for each of those bars. So looking at this chart, the red bar is the most recently reported earnings report. So overall, this was a very good quarter for Microsoft. We can see since 2017, Microsoft has shown some pretty incredible earnings growth, going from $3.37 per share in September 2017 to $9.39 earnings per share today. So looking at the current revenue and net income chart, we can see that highlighted again. Not only is revenue quickly growing since 2017, profits are also growing, and on top of that, profit margins have actually gone from 20% to 38% between 2015 and the past year. When we look at revenue versus expenses, we can see why Microsoft is such a profitable company. First, their cost of revenue is pretty low, accounting for only about a third of their revenue. On top of that, they also bring in so much revenue that even after spending $22 billion on research and development over the past year, it's hardly anything in comparison to their $158 billion in revenue that they brought in. On top of that, they still spend $20 billion on sales and marketing, and another $5 billion on general and administrative costs. So again, another $25 billion really just doesn't add up to the $158 billion in revenue that they made. Now, looking at their segments broken down, we can see that they all are performing very well. The largest seems to be the intelligent cloud business, which is their server-related products and obviously cloud services. Productivity and business seems to be the second largest segment, which is made up of Microsoft Office, Teams, LinkedIn, and their other programs and apps. The third segment, which still brought in $21 billion in operational income, is the more personal computing segment. And this segment's made up of the entire Windows operating system licenses, the entire Xbox ecosystem, and devices including the Surface and PC accessories. Now, if we look at the current forecast for Microsoft, right now the current projections are for Microsoft to hit $256 billion in revenue and $93 billion in profits by 2024. When we look at their projected revenue growth going forward, we can see that Microsoft is projected to continue growing around 13 to 18%. Using that as our growth rate to value them, a growth rate of 13% comes out to a fair PE value of 29, and a growth rate of 18% comes out to a fair PE value of 44. Now, when we look over at macro trends, we can see that the PE ratios for Microsoft have been climbing recently. And this, of course, makes sense when we look at their earnings per share from 2006 till today. They basically showed no growth during that time span, so a PE ratio of 7 to 10 was appropriate at the time for them. However, we can also see that over the past couple of years, that PE ratio has been climbing, and it now sits in the low 30s, which is close to what I think the stock should be worth. Now, if we go over to Microsoft's value chart, we can see that Microsoft is currently trading towards the low end of its fair value, and by 2024, it has an upside of $362 or 20% higher, and a high-end upside of $549 or 81% higher than the current share price. So Microsoft is definitely cheap if you're looking to buy right now. Now, that clip was a part of a much larger video that I did covering about 6 stocks, so if you want to check out the full thing, make sure you check it out right over here. And as always, thanks for watching.